Sheikh Muniandi is a resident individual in Malaysia who operates a freelance software consultancy as a sole proprietorship. He submitted his Form B on time and claimed Rm 40,000 ABLs as business traveling and entertainment expenses. On 15th of December 2025, the Inland Revenue Board conducted an audit and issued a Notice of Additional Assessment known as Form J. The IRBM rejected the entire Rm 40,000 deduction because Sheikh Muniandi failed to provide supporting documents, such as invoices, business receipts, and travel logbooks. Without proper evidence, the expenses could not be allowed as tax deduction. Sheikh Muniandi disagreed with the decision and believed that the tax officer was being too strict. However, under Malaysian tax law, taxpayers must provide sufficient evidence to support every business expense claimed. If Sheikh Muniandi wishes to challenge the additional assessment, he must submit Form Q to the Director General of Inland Revenue within 30 days from the date of the assessment notice. In this case, the deadline is 14th of January 2026 under Section 99 of the Income Tax Act of 1967. Suppose Sheikh Muniandi was hospitalized and missed the appeal deadline. He may apply for an extension of time by submitting Form N under Section 100 of the Income Tax Act 1967. The Director General will decide whether the reason is acceptable. During the audit, the IRBM also discovered that Sheikh Muniandi deliberately failed to declare Rm 30,000 consultancy income received in an offshore bank account. He believed the IRBM would never discover the income. By intentionally omitting the offshore consultancy income, Sheikh Muniandi committed tax evasion under Section 114(e)(1) of the Income Tax Act 1967. If convicted, he may be fined between Rm 1,000 baht and Rm 20,000, imprisoned for up to 3 years, and required to pay a special penalty of up to 3 times the tax undercharged, in addition to the unpaid tax. This case highlights the importance of maintaining proper business records, declaring all taxable income honestly, and following the correct legal procedures when disputing a tax assessment. Compliance with the Income Tax Act 1967 helps taxpayers avoid unnecessary penalties and legal consequences.